Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City. It is May 10th, 2024, and I'm here to bring you a brief market wrap-up for the week that just concluded, as well as to present some potential trading levels for the upcoming week starting May 13th. Before I go into that, the usual disclaimer, Precision Trading Labs, we are neither money managers nor financial advisors. Anything that I present here is not considered to be investment advice. Precision Trading Labs, we work with our subscribers in order to help them become competent traders. And so everything is presented here for information and educational purposes only. So let's take a look at the charts here. We'll start out by looking at the SPY here, which of course is the ETF of the S&P 500. So this line here represents the close of last Friday, May 3rd. So we can see we had this little run up here, approaching this area of resistance here that we've been back for really the fourth time here. So we were this created a peak here once, we've been back here twice, three times, and we've now been back here the fourth time. This represents the 52-week high here, as well as an all-time high that occurred here at the beginning of April. So we're back here for the fourth time here. So in fact, we're knocking on the door of this here. Assuming that the market kind of holds on to its momentum, I would not expect this to hold again. This is resistance. It's not fresh supply here, which would be an area that where we would want to express a bearish trade. But we've been back here now for the fourth time, and so each time you go back to resistance, it's almost like taking a sledgehammer against a cement wall. It kind of weakens each time you go back to it. So I would expect that this thing may not hold when it comes back here for the fifth time here. So we'll be looking to see what happens here. So I would not be racing to short out of here. On the other hand, if we do get a pullback here, though, down below here, this is an area of demand. This is an area where we have an exhaustion of sellers that occurred here after this pop here, and an area of consolidation. And so if we think of buying pressure from willing buyers as demand, and those shares as demand, and if we think of the shares that are tendered by willing sellers, we can think of those as supply. And so right in here, supply and demand are in balance, okay? But right here, an exhaustion of sellers occurred as buyers ran up the price chart in order to encounter willing sellers. And so since we had supply and demand in balance here, and then then there is no supply left here anymore, what's left in its wake is demand. Hence, we call this a demand zone. And incidentally, if you look below this video, you will find a link to another video that I had done about the whole supply and demand concept. And so if you want to take a slightly deeper dive into the concept, which is the foundation of our trades, you can go to that video and there'll be a wealth of information in that. So at any rate, here's where we just closed. The market just closed about a couple of minutes ago here. And so right here, we can see this demand zone is about a little less than 2% below where current price is now. So in fact, if we do get a pullback here, this would be an area where we would be looking to express a bullish trade. And of course, the most direct way to express a bullish trade, of course, would be to buy the SPY. But of course, the other way one could do that is to buy a call, and buy a call, basically at the same front line of this demand zone at around 511.5. And then so one could buy a call. And of course, other ways one could express a bullish trade here would be to buy a bull call vertical spread, or to sell a bull put vertical spread, which would allow you, of course, to collect premium. So those would be all different ways of expressing a trade out of this demand zone here. So at any rate, that's the story with the SPY. If we turn to the Qs, of course, are the ETF of the the Nasdaq 100. Okay, and so right here, while you don't quite have that explicit area of resistance like on the SPY, it's pretty close to that, because really, more or less what you're looking at is, kind of like really that region right there is more or less analogous to what I just showed you on the SPY. So unsurprisingly, as the expression goes, the charts aren't identical, but they rhyme. And so that's kind of the situation here. So on the other hand, a little higher up here, this is technically an area of a fresh area of supply here. So I would expect that if once we get above this little area of resistance here, this area of supply conceivably could hold and send price back down. I wouldn't be too confident about that, just because of the way the SPY chart looks. So I really wouldn't be looking. I really wouldn't be confident about shorting anything until an explicit clean area of supply got created, and I don't really see that here now. On the other hand, down here, the origin of this gap here, and okay, this would be an area where we could perhaps look to express a bullish trade. And so that's about 3% down from where we are now. So we'll be looking at that on the Qs. If we take a look at the IWM, of course, is the ETF of the Russell 2000. So here's where we are now. So right here, this was an area at the time, at the beginning of April, this was certainly an area of fresh supply. Okay, this is what we refer to as a rally-based drop formation. And particularly, this was actually a daily zone. And we can see that here. In fact, if I change the chart here, right here, and when I change this to a daily, okay, I'm going to spread that out a little, okay, we can very clearly see there's that rally base drop formation here. And so we're now back here. Okay, price came back in here once, dropped out of it, came back, dropped out of it a third time. So like what I was saying before about the SPY chart, this is no longer fresh supply. This is tested supply, and we can think of this now as resistance. Okay, so if we go back to the 2-hour, this is what we were looking at earlier. So basically, if I would be looking, if price surges here, I would expect it to probably kind of push through here. And so at that point, then I'd be looking up here, and this would be the area of supply that I would actually be looking to express a bearish trade from. So that's about 3% above where we just closed. And then down below here, this is an area here of demand here. And that's about 2% below where we are here. Right here, we had a rally base and a rally formation here. So why are we looking to potentially put on a bullish trade? And that's about a little over 2% down from here. And then lastly, we'll finish off by taking a look at the TLT. The TLT is the ETF of the of bonds, and very specifically longer duration bonds of 20 years duration and over. So this does not include the 10-year note, but basically these are 20-year bonds and over. So right here, from where we closed here just now, we're about 2% above here. This is an area of supply here. We had a rally, a base, and a drop here. This is where we could express a bearish trade based on the sudden exhaustion of buyers. And then notice the very, very robust long move down here. This is a very energetic move. We had a gap, and then notice the series of two very bearish candles, a pause, and then another very bearish candle there. So this is a clear indication that there was a sudden exhaustion of buyers here. So when price returns here, there's the expectation that there is still downward price pressure waiting to be tapped here. And so that's about 2% above here, and that's where we would be looking to express a bearish trade. And then below here, about 2.5% down, here is an area of demand here. Okay, and so of course this represents an exhaustion of sellers. Okay, and so essentially these trades occurred here as buyers ran up the price chart until they encountered willing sellers. And so that's how these trades occurred. So when price pulls back to here, this is where we would be looking to put on a bullish trade. Right here, there is this little gap and this little point of consolidation here. But in fact, this is kind of sitting right in the middle of a swing here. And so this could work here, but it's actually kind of very tiny. And there's really no follow through. This is kind of a one and done move here. It was that one single 2-hour candle, and then it immediately pulled back and it just kind of paused. So I would really not be looking here with any great confidence that this would be the point where I would actually express a bullish trade here. So that area, we would certainly keep an eye on it, but I would not be racing to do that. So that's sitting just around 89. Okay. So that would be about a little over 1% down from where we are now. But really, this is the quality level here where I would actually be looking to express a bullish trade. So at any rate, that's what I got. This is Mitch Firestone. Thanks a lot for your attention, and I will see you next time. Take care. Bye-bye.